So welcome the fivers. Today is Wednesday, November 20th, and let's review order flow, supply and demand analysis for the intraday based on the higher time frame analysis. Today, we're going to overview two or three, depends on how much time we got um, on the JPY pairs, so we can see what lays out um, in the intraday timeframes. So okay, so very interesting to see that um, on a daily for Australian Japanese yen, um, it's very obvious that we see a downtrend. Um, and but in the past few weeks, we see some recovery um, going upward. Um, this recovery is still within the boundaries that is not uh, um, disqualifying the downtrend yet. The reason for that is price is not exceeding a significant supply yet. As we can see, price was bounced uh, down from a very lowest low on a daily chart, and as a natural way, it recover pretty much deep upward, and then it was rejected by the supply, the significant supply above. The significant, it is a significant supply because it is the cause for price to go very, very low at a very impulsive manner. So we see the region of an effort that made some significance to go down, and we see when price is reaching up, it's not being able to break it. So in so at this point, price is being blocked and held and basing around um, rally at a flagging um, position on the midway of this pole, and that means that we cannot really expect for price to go lower at this time, and we see that price is probably um, um, will go up. What is interesting is that most traders would see that maybe the lower time frame trend is changing to uptrend. If we look at the daily overview, um, we can see this as an opportunity for us to actually sell, not now, but to sell very, very in the very foreseen future, because this is exactly what we're looking for. We are looking for price to be bouncing from uh, a legitimate place where price should be. It goes to a base where there are orders left, where there was a conviction for price to go higher and into some significance. It was blocked by a very significant key level, and it goes down and it's reacted. This reaction creates the retracement activity, which the market is always being doing, is actually doing. This is the nature of how price is moving, right? So it has to retrace at some point. Where it will be retracing at the mid level base, And so that means now price is retracing and going up, will go upward to another base, which is another significance that I estimate that will hold price and let price go lower than that. So let's dive in and see the anatomy of this event, and see what levels we would like um, um, to enter with lower risk um, entries. So this is drilling into M15, seeing that what we've seen on the daily, that there's higher lows all of the time, but then we see some confirmation that this retracement is losing some strength. Um, as we say, higher lows, higher lows, higher lows, and then price is reaching to a place of significance and actually being blocked by a significant low time frame um, uh, uh, supply. Um, when price is reaching a target and it being reacted to a valid supply or demand level, that means um, that means that the effort for price to move uh, takes is more powerful, and is probably going to cause more um, more accomplishment on its way down. So we can see that in the M15, price is being rejected um, by this flagging activity, which is pretty, we call it target, and this is a significant and important level that had created as a result to that flagging activity. Next time, what we see is that price is having a lot of selling powers in it, and as much as price go down, it having a very weak buyers for it, and more a selling accomplishment is being achieved as the fight goes on, and price is being actually breaking sales, breaking demands. Wait, up, not the right tool. Breaking demand and breaking more demands here. Okay, and eventually it bounces off a mid-range level. Mid-range levels, like we said, are good for retracements. They are good for bouncing. They are the most logic places where price will stop the activity, um, do some retracement, let the market recover for a while, and for the big players to manage to bring price to a better price to continue their loading of their position toward what they're doing. So this is exactly what we want to join. This is the activity that we want to join um, with the bigger investors. So price is bouncing from a very legit um, demand, but it is mid-range. Therefore, we consider this to be only a retracement. And another hint for us that is actually a retracement, we see that conviction. We see that this supply, when price is reaching to that supply, price has not is not powerful. The buyers are not powerful to break this uh, supply that was created based on that significant supply. So, and price is being rejected down with a lot of energy, breaking even more demands on its way. So, um, my trade idea is to look to sell around as to sell with this structure somewhere where I can get the best risk reward ratio. So we have few opportunities and few fallback opportunities to sell. So let's talk about first. Let's see where will be the barriers. We see that um, all the way up, price is pretty much consuming all the demands in here. In that sense, someone is actually being clearing the way for when is going to be selling at higher level that will be very low resistance for the whole structure of this area. So uh, we see this demand is consumed, this demand is consumed. So the whole area here, not this, the whole area from here to here are pretty much consumed. There is no demand in here. If there's no demand in here, we expect the smart guys to bring price to higher places and to sell and go very smooth through that whole area. The next demand that we can spot are located around here. So this will be the next barrier to break. But since the high time frame is downtrend, um, we expect price to only reacting to this lower level for some um, for for some space and for some times, and then it will eventually break it to lower lows. So this, if you would like an intraday target, or if you like to exit with few targets, this would be your first target to exit once you sell, because this is a fresh demand that will react and may react with deeper retracement, but yet I assume that it will be a retracement. Again, a disclaimer, don't take my words for it. It's just a scenario that can happen. Any other scenario can happen as well. Okay, so we have the first target. Let's see at higher time frame, where is price actually aiming for in the low in for selling, and after that we're going to look for a good opportunity to sell at higher price, to sell to actually buy short. To So we have this demand which actually holding up this structure. So we can assume that this demand is also wasted. So we don't really have a demand here. It was already being touched. So it will be easy penetration going through, yet it will be reacting. Bouncing and retracement will be in that area. Nothing is really smooth and easy in the market, especially around places like this. But we can see that the whole range here is actually being consumed. So this is uh, a compression area. So next barrier for us to place a target will be at lower level around here. Let's have it priced at 72, 80, 80, 82, for say. This will be a good target for price to reach. And yet the final target will be around, because all this area is consumed as well. Um, I assume that this area, the 72, 55, 60, will be another target to for price to go. If price will go lower, it will go much lower to this target, 71, 70, 74. And from that on, we are aiming for lower demand. All these are considered to be good demands to take our targets. So we have a lot of pips potential in the intraday um, perspective for the OZ Japanese yen. Um, so so if we see these targets, let's look up for good entries. In my terminology, I would look to enter where price have hidden um, supply orders waiting. And what I think will be here, one scenario that I consider in my plan is that because price is we're touching and testing this supply, and then another low supply was created and price was testing this supply as well. I consider this whole area to be consumed, compressed. So what will happen if the smart traders, the ones that actually have the ability to manipulate and create false activity for retail traders, is that they will let them they will try to create a false breakout to suck in traders that think that all these higher lows are actually signaling for a reversal. So probably they will bring price all the way up because around here there's not much supply left to actually be loaded with. So price can easily go around this supply level. Let's mark it. Which is actually another um, uh, the lower limit of another compressed area. Okay, everything here is compressed. There is no supply around here up here. The next supply that we are going to be finding is here at the 74.60, and so I suspect that a fake out will be to break these highs and also these highs going all the way to 74, and from 74 we would want to sell with the smart guys. um, and once everything here has almost no demand, we would want to sell to first target, and then for the more for the other targets below as well. So that would be a scenario that I will be looking for on a M15 on the intraday, um, in an intraday level. If we're looking at H1, um, waiting for um, higher supply um, is possible, somewhat on these levels, um, but if price really needs to go down, I think it will be from the 74, because this whole area has very few supply orders left. So it will be safer for these smart guys, um, for the smart money to actually sell from the 74. If that will not work, we'll take our stop loss at 74, 72, um, and we'll wait for price to go it higher at the 75s, and we'll try to sell from that area again. There's no need to risk it all and take all of this area, um, holding a short position. We will take a small, tiny um, loss for, let's say, it's like uh, it's like 10, 15 pips that we can risk on that trade. If that's not work, probably the next scenario will be at 75. So there's no need to risk this whole range. Let's take our loss. It's part of the game, and wait for the 75s, and sell from there, as we see that we are aligned with the longer time frame that tells us that we're still in a very legit downtrend, and we can actually take advantage of that, of the fact that most of the demands here are consumed. The main trend is going down, um, so our opportunity is to sell with the smart traders, um, around the 74 and the 75s. Um, so this is Australian yen scenario. Um, okay. Let's do another one. Any requests for any particular pair, or should I choose something? Actually, most yen, um, most yen pairs are showing a lot of similarities. Um, okay, we have a request for um, pound Swissy. Let's see if I have it. Let's take the pound Swissy. It's the first guy to respond. He gets it. So next time. All right. Um, Let me just read another question. Okay, so there is a question from Mark to show um, more authentic um, explanation for price action confirmation. Um, um, you know what? I should be more prepared for that. Um, so I'll try to, if I see it, I'll show you, because we have to understand first the theory behind it, and then I can show you also good examples for it. Um, um, and we have another request for the kiwi. The kiwi, I believe we did yesterday. So when we have time, let's only one request. So like I said, first takers takes it all. So let's do um, British pound Swissy, and tomorrow we'll do more stuff. So um, for the Swissy, on the daily and weekly, we can see that price is being um, around the lows of many years, um, and yet price is at the last few weeks is pushing upwards. Still, it's pushing upwards within the boundaries between the legit retracement for the downtrend. So, mm, so we are still going to, if we want to manage our risk well enough, we would like to look for sales. And while we know that price by its nature is retracing back, we would like to find a very low um, risk reward area to sell from. So, um, first, let's see what this bounce is made of. Let's check if that low was actually broken, and we can see that um, price was very accurate on that low, and it reacted to it. So probably it was very deep penetration to whatever demand was here, and we can consider this demand, if price goes back there again, to be wasted. There is no, our assumption is that there is no demand left in here. And knowing the main bias for the price to be downtrending, um, this low that was actually breaking other different lows. Oh, actually, it wasn't. Yeah. Well, um, but it was breaking the nearby significant low, but not the 2011 one. um, is still significant achievement for the sellers, because it was breaking um, it was breaking this, but not yet breaking the lowest low, which is considered to be probably the next target when price continue to go down. What else we can see is that price is currently um, shifting up with higher lows, but is not yet reaching a target. It is basing at um, uh, at a legitimate um, resistance area. It's a support and resistance area, and price is now reacting to that, working out its way to consume, I assume, that it's working its way to consume all these resistance from above, and in a try to reach to a fresh supply around here with uh, consumed with a consumed compressed head. So actually, we would if we would consider this as a trade where we're going to look for, um, it we will have to consider this whole range because the compression here to be our um, to be the zone that we going to risk. Okay, so the scenario is that price will go up here and around these area we would want to actually sell. The daily time frame is not a good place to is not a good time frame to accurately time in your trade. So we will drill down to H1 um, and go to that region to find a better accurate place to actually enter. Um, what we can see here that um, this whole area here is actually compressed as well. So what we were seeing on daily chart also being told that the same level is working also on H1. Usually when you drill down, you can see better and refined place, but at this particular example, we can see that price is going down. If any one of you familiar with a Quasimodo pattern, we have an article, and sometimes we mention this in our analysis. We also have some Quasimodo pattern, um, which is a very similar to Head and Shoulders, but it's kind of working upwards. So um, we have this left shoulder, we have the head, and then we expect price to go to the tip of the um, to the tip of the left shoulder, which is around here. So, um, so from here, we would want to sell. That might be a more accurate place to time our sell position. Maybe it's like 70 pips away from the line that we already drew. I don't know if I have enough history to let's see if I have enough history for M15. I do. So yeah, we can see that these lows are actually a good place to consider selling, and there is a better supply level around here at um, 133.19. That would be a more accurate place to time our sell. So we would want to let price go all the way up there to sell and actually join the action for selling if we're considering the higher time frame bias. Um, since we are like 500 pips from there, um, we can look up for more opportunities on a lower time frame where we um, do not consider the high time frame, because I assume that price slowly and gradually will crawl up there to sell more at that top. But 500 pips is huge range to play around here. And um, in my trading policy, my personal trading policy, um, trading around this area is no man's land. A price can range and play tricks all around here for very um, unexpected directions. It can go up, it could go down, because it's not uh, around or nearby any um, major key level, and there's so much resistance hidden around here. You don't know when will be the next trick played um, before price is going up, because one of the tactics to bring price up or down is also to create false moves to trick people to buy in and out. So in these area, there's going to be a lot of tricks. So I assume that this is a risky area to play around. However, if you are willing to scalp and draw your charts around very low time frame and play very short uh, um, um, targets, um, we should do a totally new analysis, not considering the high time frame, starting from H1 to M1, so we can time um, um, tactical moves inside that range. Um, I would want to see now. I wouldn't look for anything around um, this range, because I think very soon there going to be a conviction for that uh, basing activity to either go down and reload from um, from that demand, or breaking these highs and aiming for the higher highs. Um, so in either direction, that will be after the conviction of breaking this base. Um, there are a lot of barriers we can draw. I think that we should come back to this pair once we'll have a conviction to any other way. If that base turns out um, and to be sold, it will tell us different story than if it will go up, and then targets will be different. For now, there is no real good scenario whatsoever. We're in the mid range, and there's no conviction yet. Um, yes, we can try to scalp some tactical moves in it, but um, we don't have any higher time frame bias to work with us. So um, risk management wise, it's not in, at least not in my trading profile. So this is my take on the GBP Swiss. Um, okay, so um, we do have one comment that about the S&B um, governing board member said we remain willing to intervene with the foreign exchange market as necessary. Um, so yeah, the Swiss bank love um, to throw up secured statements regarding their currency. They were doing this for many years, and they are taking actions in very surprising occasions. They used to. They did it a few years back and deflated their currency in a very um, violent way that caused a lot of damage to investors and even for some brokers. Um, and so um, the Swiss bank, they are very unique in the way that they are managing their currency reserves and how they're protecting their own. Anyway, it's still in the past few years, this their currency just after the big explosion they created um, managed to stabilize into more technical patterns, and we see logic of price action with their currency. Like you can see here, that price is actually reacting to supply and bouncing off demand. Price is there um, to actually have its own its logic, and it's not different than other currencies. So we can it's still tradable. It still is tradable, and personally, I try not to listen to any statements like this. I try not to um, think what will be the outcome of any statement or any financial release, news data. Um, I don't care for the values. I only care for the time they are going to release it, because it's going to create um, high volatility in the market and huge spikes. Usually, I stay away at these times, see where price is being stabilizing, um, um, looking for logic in terms of order flow, supply and demand in the market, and then I can rejoin and take my action in it. So this is how I treat fundamentals information in my trading. So I don't really, I'm not that smart in actually forecast the outcome of such statements. So that's my idea. At least for me, it's working. So, guys, thank you for joining today's session. Um, and we'll meet again tomorrow. I still want to remind you that we invite any one of you that would like to present their own ideas, their own analysis, their own methodology. Um, it will be very valuable for us as a community, and will be great value for yourself to present and to showcase your work, your ideas. Don't be afraid to share. It's a very good thing for your own development as a trader, and to refine your ideas in it. Sharing is just something that can benefit most of all the one that shares. So please write me if you would like to present one of these morning sessions, and we'll be very honored um, to see you as our traders presenting. So take this opportunity if you feel ready. We'll be very happy. So thank you for joining in today, and we'll see you probably tomorrow. Wait for the link, and have a great trading day. High five, everyone.